Brought to you by Prescient Investment Management. Informed by science, guided by insight. Prescient Investment Management is an authorized FSP.
Welcome to another in-person recording of Honest Money. I'm thrilled to have Ray Mhere, who's head of retail at Prescient Investment Management. I'm going to let Ray speak now, but we had to invite Ray back because we got to chat with Rupert here, one of Ray's colleagues, in a previous show, and he brought up a great point about the importance of fees when we're doing investments. And I thought it is a great key point, and we haven't really gone into detail much around fees in the past. So Ray, thanks so much for joining us.
Thanks, Warren. Yeah, Rupert, that's one of his favorite topics, particularly when he talks about the multi-asset space. And I think his favorite slide is the one that shows that if you have two funds that are trying to give you the same return but have different fees, the one that has got a higher fee has to take that much more risk to achieve that return than the one that's got a lower fee. And it sounds so obvious, but clients don't usually think about it that way, and Rupert's done a good job of showing that.
Yeah, I think it's, maybe as a general comment around fees, a lot of the time it's not something we would think about when we start investing. We get excited about the potential growth of an investment or the opportunities that it's offering, but and fees just sound like such a mundane thing. If someone says, well, my investment costs 3%, and someone else says, well, mine only costs 1%, you think, well, that's not such a big difference, but over a decade, yes, it's an enormous difference.
Yeah. And I think what our industry's done, and I don't think it's been done on purpose, but it's by showing it as a percent, sometimes you actually don't see the impact of it, right? So you're showing it as an annual percent. But if you invest 100,000 Rand for a 25-year period, and say you get 10% on average for those 25 years, you end up with, say, 1.1 million Rand. Okay. If you say your fees are 2%, now you same investment, 100,000 Rand, 25 years, but now you get an 8% return. You're going to get an outcome of 700,000, and there's a 400,000 Rand difference, and that's like 40% of your return gone on that 2% fee that you're taking away. So I think when you think about it in Rand terms, it's always good to always bring it back to Rand terms as well, just to see what the actual impact on your investment is and what your outcomes is.
So I think that's the first gem of information here. When you do fees, and whether you're doing your own research or you're dealing with an advisor who's quoting you on an investment, and they quote you percentages, take the time just to do it on your calculator. I promise you it's not difficult. Or get the advisor, if you've got an advisor, to say, this is actually, on the amount of money you've got, this is what you're going to pay in rands. And I think from my perspective, and I know I could be accused of bias here, but I'm happy to pay fees. What I want to do is I want to pay fair fees. And that's the key point here, is that you can't get great investments, great advice, or anything great, in fact, for free. The things around money, that if you pay for it, you need to know that you're getting value for what you've paid.
But that's the thing. If I'm a client, what's fair, Warren? So some people say price is what you pay, value is what you get.
True.
And that's how they defend, or maybe not defend, but that's how they say that's why we charge these fees. But I'm a poor client, and I'm seeing more than 1,000 unit trust funds, all these platforms, this, that, these advisors, this one charges. How do I discern upfront whether something is worth the price that I'm paying?
Okay. So let's go, and you used upfront and not in the phrase, I'm going to use it now, but I think that's maybe the starting point. If someone's charging me massive upfront fees, and massive upfront fees could be actually almost anything. So if someone says to me, I'm going to make you pay 3% as an upfront fee to invest your money, that should be a red flag already. I feel if you're
so I'll give you 100 grand and you only invest 97,000 from at the beginning.
Day one. So that means the investment's got to go from 97,000 back to 100,000 just to break even. Now you haven't taken into account inflation. You haven't taken into account anything else. You're going backwards already. So I don't like that. I think if someone wants to charge me a fee for giving me advice and structuring my investments, then that's a separate thing. And that can be paid on an upfront basis. In fact, it's probably quite a fair way of doing it. But the moment they want to deduct it off my investment, and even worse, if they say to me, don't worry, there's no upfront fees here. You're going to invest it in a product. It's a guaranteed product, or it's an RA, but there's no fees on this. It's all paid by the company. Don't worry about it. What you need to know as the investor in that deal is you're paying a massive amount of money. Because what's happening now is there are upfront commissions which are built into the investment, and they're probably very high ongoing fees all plugged into the thing. Yeah. And if you as a client believe you're not paying anything, you need to know you're paying a heck of a lot of money.
But there's even those ones that say will boost your new initial investment. So you give us 100,000, your initial amount is going to be 105,000. Yeah, where does that come from?
Exactly, and so I'll tell you where it comes from. It comes from rather nice high ongoing fees, and what happens now is that that you feel like you're getting a great deal. And let's be clear: investment companies, whether they're standalone investment managers, whether they're ETF providers, insurance companies, banks, doesn't matter. They're not in it as a charity. They're in it as a business, and the deal is you want to be again. I'm repeating the point. You want to be fairly charged. So understand that on the other side of the equation, if someone says, okay, you've invested 100,000 rand, we're going to give you 105,000 rand as the growth to start. It's not because they like you that much. It's because they're going to make a lot of money out of you.
Okay. So now you've made the investment. Then there are these ongoing charges. So
I think let's divvy it up. As a starting point, you're going to pay, if you've got advice, so if you're paying a financial planner or a wealth manager, the range of fees there is probably going to be about 0.5% a year, up to 1% a year before VAT. Okay, so you would add VAT. And it'll range because unfortunately, the more money you have, the lower your percentage fees will be. That's how life works. And I say unfortunately because smaller investors probably need much more value from the advice, and they're going to have to pay a bigger percentage. But that's the starting point. Then if you've got, let's say, an administration platform. So what does that mean? Let's say you end up with 2 or 3 different kinds of investments, and you don't want to open 2 or 3 different contracts with 2 or 3 different companies. You most likely will use an administration platform. It makes your life a bit easier from a tax reporting and monitoring of your investments point of view. And there might be a reason, for example, that you've got a retirement fund or something like that, an RA or a preservation fund. Then you definitely need an administration platform. And those fees, my view is you're probably in the range of 0.5 down to 0.2% a year is the kind of range of fees. Again, dependent on size of investments, and the bigger the amount, the smaller the fees. And then you're going to pay the investment manager. So that's your unit trust cost, your exchange traded fund cost, or whatever the deal is there. My view is, again, it will depend on what you choose, and you need to know that as a kind of a fair range, you're probably going to be 0.5 to 2% a year is the fee that you're going to pay for that investment management. And it's not going to be something that you see as a fee being charged on your statement. In other words, you put the money into the unit trust, you're not going to see that you've paid XYZ 200 Rand every month for the fee. It's just going to be a percentage. So just know, you need to know what it is and be clear on that, but know that that's kind of the range. I think it's very rare that you're going to get a high quality, let's say a balanced unit trust at 0.5% a year. You're probably going to get a money market unit trust at 0.5% a year. That's what, I mean,
if I look, just listening to what you said, the ranges should be. It ranges anywhere between, say, 1.2% to like 3.5%.
Is what the market's charging.
Yeah. That's quite a wide range. So exactly, that's quite a wide range.
Yeah.
If you put all of that together.
I'm not a big fan of 3%.
Yeah.
What bothers me about 3% is either that it's a fixed percentage, in other words, that they're saying to you, we're going to charge you 3% a year every year for investment management. And that's too high, because that means your investment needs to grow by at least 3% just to pay for itself. Then it needs to grow by inflation as well for you just to make your money stand still in real terms, to keep the buying power of your money. So now you need 6%, let's say inflation's at 6, which is what I view it as. A long term, it's going to be out. So then you need to get the investment to grow at 9% a year just to stand still. That's not growing your capital. So I don't like 3%. The other reason that you might be paying 3% is one of my bugbears in life, which is performance fees. Yeah. And there the investment manager says, don't worry, you can pay me almost nothing if your money doesn't grow. That sounds like kind of an attractive proposition. But if we grow your money a lot, then we're going to take a performance fee. We're going to take 20 or 25% of the growth that we've generated for you. And don't worry about it because your money's growing. When you do those calculations, I don't think performance fees work for anybody except the investment manager. It's a lucrative thing to be. That's why you find so many American hedge fund managers who are multi-billionaires, because they are used to charging massive performance fees. You can get equally good returns before fees from a good investment manager who doesn't charge you performance fees. And that for me is the key point here. I want a fixed percentage, if that makes sense, because percentages aren't fixed. But if you said, I'm going to charge you 1%, I'm going to charge you 1.5%, that's what it always is, up or down. If your money's shrinking, the 1% is of a smaller amount. So there isn't an investment manager alive who's charging a fixed percentage who wants to shrink your money because they're earning less. Your interests are aligned.
Yeah, you're almost saying, why are you charging me extra for doing what's expected of you? Yeah. I suppose that's what you're saying with regards to performance fees.
Yeah. So I don't like performance fees. So to answer your question around what's fair, I think we're giving you a range now, understanding that when you do this, unfortunately, smaller investors just generally pay higher percentages. I think it's not necessarily the fairest thing in the world. The reason for that, and I've done this homework thousands of times over again, is it costs money to open an account for somebody. It costs money to do the administration for that person. It costs money to do the tax reporting, to do the ongoing management. So it's not as if you get that for free on day one. And I know, because in my own business, we spend a lot of money on systems. It's expensive to do this stuff. So unfortunately, that is the case. There is a fixed cost to being a client of any investment company.
Yeah. And I think, look, the industry has changed. Fees have reduced over the years. But I think in South Africa in particular, we probably could carry on reducing fees even further. I looked at, before I came here, I actually looked at what the average fees are, asset management fees overseas, and for an actively managed fund, it's about 0.7%, and their passive funds go all the way down to 0.06% or 6 basis points. Whereas here, we can, actively managed funds are still at 1.2% on average, and I think in the passive space, we're still around 40 kind of basis points, or 0.3%.
Yeah, so I agree with that, and I think the scope is there to reduce. I think it's one important point which people miss when you're investing. So let's just talk about an index fund, index tracker, because you've brought up that cost now. So when someone looks at an index fund in South Africa and says, "Hang on, I'm paying 0.4, 0.5% a year, but I go and buy my Vanguard in America and I can pay 0.0006," why is that? Just understand. The American ETF or that Vanguard ETF, for example, and they're usually the ones that are leading the charge, they are 10 or 20 times bigger in terms of investment managers, and often up to 1,000 times bigger. So their costs can be divided by a much bigger asset base. So it is also true that we're a smaller market, there are a smaller number of investors, but the cost base is still there. So I need to be fair to the industry, that the fees should come down. I think there is still scope, but it won't. It's very unlikely that we get to the point where our investment managers are charging the same as the Americans. The market size is just not there.
Yeah, no, and like you said, it's not about. You have to pay. I think fees. It's not about not paying fees. It's about paying fair fees for what you're getting in this investment process. Because the more you pay away in fees, the less your return you're going to get in the long run.
Yeah, and I think you made a key point which we don't like doing. Is you've got to calculate those fees properly. Do them in rand terms. Don't be afraid. A lot of people don't know how to calculate percentages. So if you're dealing with an advisor, don't be afraid to say, "I need you to show me the rand amount of this." That's an absolutely fair question to ask. No one should shy away from doing that. And then for the rest, just do a YouTube video. Go and YouTube yourself. Go and YouTube for yourself. About how to calculate percentages. There are lots of good ways to find that out.
And don't be fooled by good marketing tactics.
Yeah, I think it's true. I think people who have a great ad campaign on TV or whatever, be careful of that. I think simple, clear messaging is important, and being transparent with what you're going to pay, equally important. Yeah,
or being told that if you do this, then we're going to give you this amount extra. Just think about, where's that coming from? Where does the extra booster from your upfront investment, when they give you that little extra amount, where does that come from? And is it going to come out of your fees at some point in the future? So I suppose it is difficult to look at the fine print at some of these things, but understand what it is that you're paying. Make sure you understand it before you invest your money in it.
Yeah, and don't be scared to do a bit of research. I mean, I think don't just take a proposal from anybody or online or whatever it is and assume that that's what the market is. And do a bit of homework, do a bit of comparative shopping. We love to do it for our devices and our phones and our cars and all that stuff. We don't do it for investments.
Great.
Ray, thank you so much. I feel like I've been on the other side of the hot seat today. I think it's been a great chat. I'm not going to ask you our favorite question because we've asked you before, but before I wrap up, anything from your side that you, anything else around fees that you want us to cover? Do you think we've hit it?
I think the topic of fees is wide, and I think you could spend hours and hours and hours on it. Like we said in the end, I think it's just a matter of understanding what it is that you're paying and who you're paying it to as well. So I know that the industry, there's things called discretionary fund managers have come in. There's so many things to look at fees. So understand who you're paying and what you're paying for before you kind of put your money into any type of investment.
Neatly said. We look forward to chatting again. Thanks so much, Ray.
Thanks, Warren. All the best.
Brought to you by Prescient Investment Management. Informed by science, guided by insight. Prescient Investment Management is an authorized FSP.